The top business stories live from the Sky News City studio. The UK job market contracts with vacancies falling at the fastest pace since the height of the pandemic. Ryanair reports a decline in profits, blaming fuel costs and its removal from some online booking sites. Plus, Amazon abandons its proposed acquisition of iRobot following reports that Brussels was preparing to block the deal. Good afternoon, this is Business Live with me, Ian King. Job vacancies are falling at the fastest pace since the height of the pandemic, according to figures published today. The UK job market report from Adzuna, the job search engine, suggests total advertised job vacancies fell by nearly 7%, 929,138 in December. It was the second consecutive month in which total vacancies were lower than 1 million. The last time job vacancies fell this dramatically was in June 2020, when the first COVID lockdown was still running. Well, joining me now is Andrew Hunter. He's co-founder of Adzuna. Andrew, welcome to you. What do you think explains the reluctance of businesses to hire just now?
Afternoon, Ian. What you highlighted there is actually, quite sobering data. Ordinarily, in late December and early January, we would see a flood of job seekers hitting the market and a spike in recruitment activity. We've seen the former, but we've not seen the latter. And yes, jobs are down 6 to 8% on the Adzuna platform. And I think this is largely down to 2 or 3 major things. Employers clearly aren't confident enough to hire at any pace, and there's still this uncertainty in the wider economy with inflation still looming. I think employers across the country are feeling the pinch and looking to cut costs and feeling the increased costs of goods and services. And finally, I think firms are recognizing that the game has changed. Good valuations, both public and private, are coming from strong fundamentals, increased profitability, and a robust outlook. It's no longer this environment of growth at all costs in a low interest environment. So companies are optimizing for profitability, and in that, they're looking carefully at recruitment budgets.
What is interesting, though, Andrew, is that this doesn't appear to be feeding through into lower salaries yet. Do you think that will happen eventually?
I hope not, because salaries aren't keeping pace with inflation at the moment. The Adzuna data has shown 2% rise in salaries over the last year. And as we know, inflation is at 3.9 or 4%. So if salaries are to be reduced to come in line with the current job market, then we're just going to drive the cost of living further into a bad place. So I'm really hopeful that that doesn't happen, but we are due some sort of correction.
Are there any sectors or regions which are bucking the trend?
Well, if you're looking to be a teacher or a healthcare worker, then absolutely. So teaching roles on our platform are up 35% year on year. Teaching in schools, around 7,000 vacancies. And if you include private tutors, we're into the tens of thousands. And of course, healthcare, we still have 100,000 plus jobs in the NHS, and they're looking to be filled. But again, there's salary issues, and attracting people to the health service remains a problem.
Yeah, it's interesting development, that. What about to the downside? Which of the sectors suffering pain? I imagine hospitality is quite under pressure.
So we've seen retail and hospitality fall by about 15% in the month of December, and that doesn't look to be changing in January either. I operate in the technology space, and that's really taken some hard hits. We remember January of last year, the big layoffs from the Magnificent Seven companies, but we're still seeing layoffs even to this day. Salesforce, Microsoft, eBay, all laying off folks in January of 2024. So it's not looking like a great outlook. Now, hopefully the tide will turn, and I think we can begin to learn what the future might look like for Britain by looking across the Atlantic to the US.
But from what you're saying, Andrew, you would expect the January figures to show a continuation of this trend?
Sadly, I think that's right. We look at the hiring activity on an hour-by-hour and day-by-day basis, and we're right up to the 29th of January, and we're just not seeing the spike in recruitment activity really in any sector month to date.
Probably important to stress that the UK isn't the only economy going through this sort of situation. I mean, arguably, it's probably worse in continental Europe.
Yes, that's right. And we're certainly not the only ones suffering this. We've seen a trend in Germany, in France, in Italy of gradually rising unemployment. And in fact, in Germany, they're at a 2-year high for unemployment. So this problem is not unique to the United Kingdom. But I'm hopeful that as inflation falls, and who knows if that's going to be in the spring or the summer, we will see job creation being stimulated. Unfortunately, these two things are rather pegged together. As inflation rises, we know that that hinders job creation.
Yeah, well, as you say, we can but hope. Andrew, good to talk to you this afternoon. Thank you.
Thanks, Ian.
Now, Ryanair has reported a drop in profits after tax to €15 million for the final 3 months of 2023. That was down from €211 million in the same period in 2022. Well, that decline reflected a €320 million increase in Ryanair's fuel bill and the fact that some online travel agents with whom the carrier has been in dispute have removed flights from their websites. I've been speaking to Ryanair's Chief Financial Officer, Neil Sorahan. I began by asking him how long the latter situation would continue to have an impact.
We're already seeing it unwinding at this stage. We had a very strong first 9 months of the year where we recorded a 39% increase in profits to 2.2 billion. We've already seen the likes of Love Holiday and Kiwi sign agreements with Ryanair, and we're seeing the OTA issue now starting to resolve itself.
To what extent have you been cutting prices to fill the seats?
We had to do a bit of that over Christmas, albeit that fares were up 13%. We thought they would have been up a couple of points more than that. Load factors were slightly impacted in Q3 as well. But as I said, an extremely strong 9 months of the year, and we're targeting record profits on a full year basis. I mean, the biggest issue we had in the quarter was not the OTAs, it was fuel. We saw a 35% increase in our fuel bill. But when we look into next year, we've already locked in meaningful savings on our fuel bill where we're hedged at $79 a barrel, which is down from the $89 a barrel that we had this year. And that'll save us about €45 billion.
Now, you make the point in the statement there could be further slippage of deliveries from Boeing in the current quarter. What sort of comeback do you have under those circumstances?
I'd be reasonably comfortable that we'll have 50 incremental aircraft in the fleet for summer of 2024, which is 174 game changers. So we'll have over 600 aircraft in our fleet. I was in Seattle a couple of weeks ago, and I'm happy with the assurances that I got.
Yeah, you do make the point in the statement that you have confidence in Boeing's current management.
We do. I think what Dave Calhoun and Brian West, the CFO, are doing it needs to be backed. We're helping them. We've sent over more engineers at their request, and we're working closely with them.
You haven't ordered any of the 737 MAX 9, which was involved in the recent incident. You bought the MAX 8 and the MAX 10, but not the MAX 9. Why was that?
So it boiled down to gauge on the aircraft and obviously pricing.
Some other business news stories for you now. And the British public's expectations for inflation have fallen sharply, according to a closely followed survey. According to the survey carried out by the investment bank Citi and the polling firm YouGov, the public expected in November that inflation would be an average of 3.9% over the coming year. That fell to 3.5% in December and was down from 4.2% in October. Well, the Bank of England's Monetary Policy Committee holds its first meeting of the year on Thursday, but it's widely expected to keep the bank's policy rate at the current 5.25%. Amazon has abandoned its proposed acquisition of iRobot, the maker of the self-driving robot vacuum cleaner Roomba. The decision comes days after it was reported that the European Commission was preparing to block the $1.45 billion deal. Brussels indicated in November last year that it was worried it could restrict competition in the robot vacuum cleaner market. Well, Amazon will pay iRobot a $94 million termination fee. Following the decision, iRobot has announced a restructuring that will include 350 job cuts, representing about 31% of its workforce, while its chief executive and chairman, Colin Angle, will step down. A satellite operator in which the UK government owns a near 11% stake today cut its financial targets for the current year. Taxpayers own the stake in Paris-listed Eutelsat following its merger last year with OneWeb, a company that was rescued from bankruptcy by Boris Johnson's government with the support of a £400 million cash injection. But the company said this morning that OneWeb's low Earth orbit activities were running behind schedule. Share sales are now expected to be €1.3 billion this year, down from the previous target of €1.42 billion. Shares of Eutelsat down 12.5% in Paris. Now, it's long been argued that it should be as easy for retail investors to buy bonds issued by companies as it is to buy shares in those companies. At present, though, it's not. The vast majority of corporate bond issues are targeted at institutional investors with a minimum investment of £100,000. Well, now the digital marketplace Wise Alpha hopes to open the market to retail investors. For a while, it's been selling fractions of bonds with a minimum investment of just £100, but it's now making its technology available to wealth managers. Well, joining me to talk about this is Reza Ahmed, the Chief Executive of Wise Alpha. Reza, good to see you today.
Hi.
Why do these minimum denominations exist?
Well, I think it's a simple case of market structure. So the largest corporations and the large global banks, they have a very strong relationship with each other, and it's become a club market of institutionals.
It's the same in continental Europe. I mean, the same applies there. It's about 100,000 euros, yeah.
Exactly. I mean, both the UK and European markets have a very small number of retail-denominated bond issues. So it's been a big problem. It means that investors haven't been able to access, the bonds of, say, companies like Ocado or other FTSE-size issuers, which has basically reduced their choice, of deciding whether they invest in the high-risk shares or the lower-risk predictable income bonds.
You've been running this service for a couple of years now, fractional bonds. What are the most commonly traded bonds on your website?
Oh, well, I mean, the most commonly traded bonds are those which are well-known, brand-name companies like Virgin Media, Ocado, BT, Marks & Spencer. And so, these are the kind of perfect type of companies for investors to invest in because they know them, they understand the products, and they also trade the shares. So, we're making a big push to make this more accessible to the average investor.
Yeah, I mean, it sounds like a neat service. Why are you making it available to others rather than keeping it to yourself?
Oh, well, I mean, look, our agenda is to broaden and democratize access to the corporate bond market. And we realize that, in order to achieve that agenda, it's better to bring other players into that market. And if we can do so by allowing them to white label our technology, connect to our market, then that serves that agenda.
What is the typical sort of hold period for a fractional bond?
Well, most bonds, have a maturity, of around 5 years, but you can often get a lot longer maturities, particularly those for companies who are lower risk or what they call investment grade bonds. And sometimes they can even be up to 50 years or longer. But in general, most of the bonds that we have on our marketplace are targeted in the kind of 5 to 10 year range.
And so someone who buys a fractional bond on your marketplace, typically they'd hold it till duration, would they?
Yeah, typically retail investors, we find, tend to hold to maturity. There is trading that goes on, and that's a way for people to receive liquidity. But people are naturally looking at bonds as a way to earn income, and they've got a defined investment horizon, so it's a perfect product for that type of activity. And
that, of course, is a key attraction. I mean, the other thing we should say is that if a company goes bust, bondholders rank above shareholders in the pecking order.
Well, that's exactly right. So, as you enter unpredictable markets, which is potentially one scenario going forward, the lower risk instruments within a company are potentially much more interesting. I mean, over the last 6 months, to 12 months, we've seen almost equity style returns available in secured corporate debt, which rank ahead of the equity. And there's been a strong price move up in the recent quarters. So, bond investors have generally done exceptionally well. And I think the one thing you could be certain of, Ian, is that there's going to be uncertainty going forward. When there's uncertainty, having a predictable income and a lower risk security can often be a valuable addition to an investor's portfolio.
Indeed. It's worth pointing out, I guess, also that currently the Treasury and the regulator doesn't allow fractional shares to be held in an ISA, and presumably that's the same with fractional bonds. Can you see that changing any time?
Well, look, I think there is a big move by governments and the regulator to try to change the dynamic in terms of access to corporate bonds. And also they've been very supportive of greater increased access to shares. But I think it's even more important in the bond market, given the high barriers to entry to get in there. I think that this is going to change over the next 6 months. Certainly recently, the regulator, the FCA, came out with an engagement paper consulting with the industry, trying to drive forward an initiative to get more retail investors into corporate bonds. I think, we've obviously, seen this well in advance of the regulator, and they've taken note of our initiatives, and we think that there's going to be a bigger emphasis going forward over the course of this year.
And what sort of reaction have you had from the companies that issue bonds themselves? Are they particularly interested in what you're doing?
Some are. I mean, we have some platform users who are issuers of those bonds, so we have CFOs of banks and, other senior members of management who are on the platform. They love the service. I mean, they think it's brilliant. And I think, they would like to see more of it. I mean, I think actually in these types of market where there's a bit of dislocation in terms of financing, greater access to different liquidity pools, particularly the retail liquidity pool, could be very interesting. Some of these companies have a retail customer base. There would be a strong demand, strong interest, if they offered a retail-denominated bond, for example.
Absolutely. Riza, it's a fascinating initiative. Good to talk to you. Thank you.
Thank you.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Monday afternoon. Stay with us.
I mean, she's a very interesting woman. The more you kind of get to know her, the more you want to know about her, really. She's an absolute pioneer for education, for equality, so for women's equality, and in general, the power of education. The fact that education gives you the opportunity to do anything, anywhere in the world. She really sort of paved the way for that idea of education opening doors. I mean, I think there's different aspects of proving sainted today. So there's partly the miracle element, which sadly we don't know too much about. So there are things kind of ongoing on that front that are necessarily kept confidential, while they're being investigated. So the other element of it is proving, relevance to today's society. So it's not just a woman from Yorkshire 400 years ago. She's a woman who changed things, who is relevant to today, who talks about values that we can identify with, and who people should know about. So it's not just about that sort of that well-known bit of it, it's the other side of it as well. The idea that it's something of relevance to today's society and something worth celebrating. The followers of her order are still changing, education. So there's been recent legislation in South Sudan that her sisters have actually influenced her order that's working there currently to provide education for young girls. So for Mary Ward herself, this is at a time where philosophers are debating if women even have souls or not. So women are just seen as, wives and mothers, that's all they're there for. And Mary Ward says that they deserve an education, they're intellectually as capable as boys, they deserve an equal education, they deserve all the opportunities that boys get. And with education, anything is possible for them. It's very modern as an approach.
Fly Emirates. Fly better. Fly Emirates. Fly better. Thank you.
Well, European stocks have finished the day trading largely to the downside. Only the CAC 40 in positive territory, and that was really only at break-even. Talking points today include the health technology group Philips. It's off 5% in Amsterdam after it halted sales of its sleep apnea machines in the US after reaching an agreement with authorities there following several years of product recalls. Here in London, the FTSE 100 has finished more or less unchanged in mixed trade right now. The top percentage gainer this afternoon was the Mexican silver miner Fresnillo. That's finished up nearly 10%, while WPP is ahead 1.5% ahead of investor presentations later this week. To the downside, St James's Place has succumbed to profit-taking after it enjoyed some solid gains on Friday. Outside the FTSE 100, the vape distributor Chill Brands is off 22% on the government's proposed ban on disposable vapes, while vape supplier Supreme is off by some 7.5%. Over on Wall Street, it's been quite a dull start to the week, in all honesty. The Nasdaq ticking up slightly higher, the Dow's down, the S&P very marginally higher. Interesting to talk about Microsoft. That's up 0.5% ahead of what will be closely followed results tomorrow, up 0.75% now. Also want to point out Flutter Entertainment, the owner, of course, of Paddy Power and Betfair. That's made its debut on the New York Stock Exchange this afternoon. The shares are currently ahead by 0.75%. Over on the FX market, pounds off by 1/6% against the dollar. It's up by nearly 2/5% against the euro. The single currency off nearly 0.5% against the greenback. As for the oil price, well, earlier today, that hit its highest level since the 30th November. It's given back those gains as the day has gone on. A barrel of Brent crude is currently changing hands at $82.53 a barrel. That is down a little under 1.25% on the session. Well, joining me now is Chris Beecham, Chief Market Analyst of the UK and Head of Market Analysis at IG Group. Chris, welcome to you. Massive week for tech earnings in the US. I mentioned Microsoft there, but it's going to be really, really hectic.
It is. It's the rest of the Magnificent Seven, as they call them, the stocks that have driven the gains in the market over the past year. If you look at the earnings expectations, they're supposed to sort of drive about 50% of the earnings growth for the entire S&P 500. If you took them out of the equation, earnings growth would be negative for Q4. So a big week for markets.
These things, in many cases, are priced to perfection. If they don't meet their forecasts, all hell could break loose.
Certainly in the short term, yeah, I think markets have come an awfully long way since October. A lot of good news is in the price, I think. But if you look at something like Apple, it's only back to where it was 6 months ago. So it's taken its time to get back there. And there is still plenty of upside if, as we think, the economic outlook has improved over the past 6 months.
But it was quite instructive. I mean, we had, you mentioned the Magnificent Seven. We've had Tesla so far. And I mean, they sold off very aggressively last week on what seemed to me to be quite a sort of modest miss.
Yeah, Tesla sort of squeaks into the Magnificent Seven, really, just about. The rest of them do far better and have far better outlook. But Tesla, you've got competition coming on all sides for them at the moment. So I think investors are thinking there are now alternatives in the electric car market, but there's no alternative to Apple and Amazon. We're looking at the areas where they're dominant. So that's why you're still seeing, I think, plenty of upside to come, at least in the longer term.
Well, that's the equity markets. It's also a busy week in the FX and fixed income markets as well, because we've got interest rate decisions this week from the Federal Reserve and the Bank of England, and non-farm payrolls on Friday, of course, in the US.
It's all come through at once this week, really, just to keep investors on their toes. But the Fed and the BOE both expect to leave rates unchanged, of course, but it's the commentary about what they might do next. And looking at the most recent data, you could argue that maybe a Fed March rate cut is still on the cards. Payrolls on Friday, job growth expected to slow, wage growth coming down. So that soft landing in the US, that hope that we avoid the recession, is still there if we get maybe a rate cut fairly soon.
I mean, no one expects the Bank of England to move this week, but you could see there is a case for it to do so in many ways. I mean, consumer spending has been a bit ho-hum lately. Inflation clearly easing, inflation expectations easing.
Yes, as you were saying just a while ago, things are moving in the right direction, but the most recent CPI reading in the UK was a bit stronger. So they're going to err on the side of caution, because no one of the central bankers wants to sort of cut rates too soon and then have inflation come back again, because that would be something they can't possibly live down.
Yeah, so how do they telegraph to the market that they are potentially going to pivot to a dovish?
Yeah, this is the trick, really. It's a kind of, we're looking at the possibility and we want to see these certain things happen. I think if you get another couple of months of inflation coming back down again, that gives them the kind of air cover they need to move on rates.
But it's very interesting. If you look at the way sterling has traded, for example, I mean, the FX market's giving no indication that there's an early rate cut coming from the bank.
No, it really is, I think, benefiting from that dollar softness because of what the Fed's been saying. They've been beating the dovish drum, oddly enough, much more than the Bank of England. So that's where the differential comes from. But you could, I think, see the pound turn down again if the BOE just gives that a bit of wiggle room to its forecasts.
Out of the big three, the bank, the Fed, the European Central Bank, which one goes first in your
I think
opinion?
the Fed goes first, really, and that gives the ECB as well cover to move. I think they're waiting for the US to jump, and then they can follow on.
All right. Chris, got to leave it there. Good to see you. Busy week ahead for you. Good to see you today. Thank you. That's it from me. I'm back again with Business Live tomorrow at 11:30. Hope very much to see you then. My guests are going to include Deborah Crew, the Chief Executive of Diageo, the drinks giant, which makes practically everything in your drinks cabinet, from Johnny Walker Scotch whisky to Smirnoff vodka to Gordon's gin, and even good old Guinness as well. I might have a pint of that on the way home. Anyway, coming up next, it's Mark Austin with the News Hour. Do stay tuned. I'll see you tomorrow. Thanks for joining me today. Cheerio.